Morning, guys. John here, Mr. Forex Fire. It's now end of week 4, very last day. Now, I'm going to sort of set up the charts in a minute. I am around about 2 minutes late, to be honest, getting set up, getting the kids off to school. The general bias yesterday, we've come down just to test towards no, we haven't come down to test the orange line. So we stayed in quite a bit of a range. So at the moment, we're possibly heading down towards this today, to be fair, before we get any sort of movement. General bias will stick with what we have on our lower and high. So this is going to be our crossbar and our goal line at the moment, okay? From there, yesterday, there was a trade, remember, towards the back end. We didn't enter it, even though it was just about to go on the entry, and we're going to see what happened with that. Let's take a look. So it entered, and it would have given around about a 1.43. We didn't enter it because I like to just document what happens between my time frame. If I'm honest with you, if I was trading this without documenting this on the videos, I would have managed that trade and possibly got out halfway through, but I didn't document it in my time frame, so it doesn't go into the evaluation on what we've taken. Going on the valuations, what we have is at the moment, I'll get this to load up, and then we'll get the goalpost set. We've got a 38.07% month, 2% daily, and we are now finally on our last day. Now I'm just going to quickly stop the share before we set everything up. What I'm looking towards doing soon is I'm going to start to structure this with some other things and sort of the risk to reward stuff, where that 38% could potentially be over 100 and something or more. It's just something that I'm sort of learning, something I'm working towards, and something I'm looking at. So we could quadruple, maybe even better that in the course of a month. If I implemented the structure and what I'm learning at the moment, if I was to put that into the risk to reward on this and the way to grow it, that at the moment on 38.07 would certainly be over 100% gain, over and more. So that will be coming in time. It is the end of the week. It is the end of the month, end of the 4 weeks or the month of documenting. I'm going to have a well-earned break after today. Let's get on the charts, see what we can see what we can get. It is NFP day to day, albeit this will be gearing up for that this afternoon. Let's go to the 15-minute just to see any more order blocks. And I've enjoyed this journey. And if you have, please comment, put some comments on the YouTube channel. Don't forget to hit the subscribe and the notification bell. Let's just take a look, see if we can see anything else in here. So on the higher side, that's been mitigated there. This one hasn't, so I'm going to put that there. That's the 15 minutes. It's going to go down to 5 a minute. Right, so the 5 holds quite well there. Right. Let's tell me for the up. Right, nest. We've got a nest. Pull that out. So that's what we call a nest, guys. It's nesting inside. Okay, so we've got target areas where or possibly coming down to go to the higher side. Again, if I go on the 15-minute, structure-wise, in fact, we'll go on the 1 minute, bring this in, and I'm going to work the path, because this will end up being a higher time frame, remember. We'll have to change the thickness on that. To that, to that, to that, to the swing, to the swing. Swings. Always do it to the impulse drive of the swings, and there's a channel there. Very interesting. Very interesting. So as we come down in this channel here, this is on the 1 minute. Let's again, when you scroll into these, this is higher time frame built into an intermediary price. Again, when you go up the time frames, you will see that the structure is held. Great tip, this. And then again, when you're coming up to break these structure points, when you come up to break these structure points, okay, these lower highs, you're looking towards 50% in general and in theory, because you've got, let's see here, B. The A to B is the consolidation retracement, okay? What you generally have, that A to B, say 50% of the A to B, you get the push back up halfway, okay? So then you've got, again, let's take a look. That's right, John. B to C, okay. Let's just check, yeah. To B, look at that. Pull out, come back in, 50%. Doesn't always happen, but it's a good retraced area. And again, when we look at this initial drive, okay, when you look at, let's see it from there down to there. See the drive? See where it's touching? It's bang on. This sort of stuff, yeah, this sort of stuff comes with practice, and you've just got to sort of learn to sort of draw them out and have a bit of fun with it, in fairness. Right, so we're just going to put this on that there intermediary price. Let's go down to 1 minute and let's get our goalpost set. So just digressed a little bit there. I just hope you found a little bit of insightfulness on that. So we've got at 30 AM start. Right, so again, just to be visual, we've got a range there. Okay, so you could see it technically, you've got, yeah, B. This will be a C leg. We are waiting for a push out, most certainly, of one of these areas, to be fair. Just gonna, there's a green. Visibility, text coordinates. Let's get this right. There it is. Right, so we're going to delve a little bit deeper in. magnifying glass. Didn't mean to go that far in. So structure-wise, let's get this played out. We've got the high, because we always start building our structure. Okay, we've got the low at the moment, because that would come down as a low, to be honest. We're waiting to see what happens. We'll get the fire wand out. We're waiting to see what happens with this at the moment. Is it going to drive? Is it going to protect this? Is it going to come down to continue out of here? So at the moment, again, we're just going to draw out a couple of lines there as well. And that's our range at the moment. I'm going to pause the video. We'll come back in a moment, and then we'll work our structure from this swing point. And then from there, we'll see where we are with the field of play. Again, top tips before we go. This is laying out your goalposts. Okay, I'll say this because this is the final day. Lay out your goalposts of your time frame, half 8, half 10, or whatever session you want to do. Make sure you've got a general bias for the day. My bias is still staying there from yesterday. I'm looking for an area down here to be hit, and then possible up here. Now that is condensing it. It's squashing the juice of that, if you like to see it. Squashing the juice and keeping it contained to a certain area. Okay, because what you've got, even from that move there, is around 17 pips or so on there. Get rid of that. Press the wrong thing. From there, about 12 pips or so. Again, doesn't see much, but when I see a 12 pips from there to there is around about 2 hours. Okay. From there to their price range is only given 11 pips. So again, doesn't seem much. We are working on a 1 minute time frame. It doesn't seem much of a sort of leeway, but again, over 2 hours, that's given us just under 12 pips. Your 12 pip move is just down here, so we may get a move down on the bottom side. I'm going to pause the video because we're looking at liquidity areas at the moment to sort of be smashed through. Okay, we just want to see where money wants to show its hand. Pause the video for now, and we'll come back in a moment. Hi guys, so I'm just going to show you something that we work upon as well, because we tend to use currency strength to help us identify which pair's weak, which pair's strong. I'm just going to get rid of that. That was just a channel I was looking at. So we're waiting for a break of liquidity from this high or lower side. So in the group, Andy, who's a master on the currency strength at the moment, he's just posted this off this morning at 8:25. The euro is very, very strong, as too is the USD. This is the pair that I sort of trade, as you know. I'm not going to move on to any other pair. So there's going to be a hell of a battle between these two, hence why we have a huge consolidated area. So again, I'm not going to be too worried. All it means is I just pause the video. I wait for that break of structure to the high side or the break of structure to the lower side. Then I can form my bias with the order block for the return to wait for that entry. And then if we are going to start a downtrend or an uptrend, we can see if we can ride that wave upon the break of structure, order block return, and then break of structure, order block return, a bit like the Elliott wave. So again, going to pause the video. That's just to give you a little update and a little bit of an insight of something else that we use to help us sort of look at the structure and the strength to weakness. Okay, so I'm just going to pause the video. We'll be back once I get further sort of confluence of information on when we get this breakout. Hi guys, so at the moment we've had that tiny bit of breakout, liquidity taken. So again, very wicky, very choppy in fairness. with regards to the Euro USD the day. I think this is all down to the lead up to what NFP is going to be. Again, I'm just going to take a little look, see if we can find something. It's only a 157 to be fair. That there now is obviously, come on. That there now is a break of structure, as we can see. Okay, we've confirmed that's a break of structure. We can now see liquidity has been taken. And again, I just want to document, obviously, structure. Structure is always key to these things. So that's a lower high. This here has now become a lower low. Okay. Because again, these sessions are not just there to try and make profits as well. These sessions were always here to teach you how to mark your charts up and things like that. Again, that's a lower low. That's gone your lower high. So far, that's your lower low. We'll just identifying structure as well at this point. If I was to risk anything, because we are on this NFP day to day, I'm just going to go with a 1% in all honesty. Okay, 1% risk. And if I'm honest with you, again, it's a 157. It's not a huge sort of return, to be honest. But we'll see what happens. And then, in fairness, possibly the best move will obviously, if we have got a high, a lower low, a lower high, a lower low, if we can contain the lower high within this swing point structure and then drive down. Okay, so let's see, that becomes the lower low, or the lower high, sorry, and then we get a lower low to here, then we will be more confident and have more confluence with regards to then taking this particular range as an entry. It's because then we can confirm we've broken out of this range. Okay, looks like it's going to bounce into an entry at the moment. I'm just going to leave this live. That's definitely going to bounce into an entry in all fairness, or it's just going to come short. There's the entry, right? So we're in with a 1% risk. Let's see where it takes us. Again, we need now that to hold structure. This needs to hold structure. Let's go on to here. Needs to hold. So that's there as our protected high at the moment. So that there's our protected high. So that needs to hold. Get rid of that. Get that. That needs to hold. And what I'll do, I'll pause the video, see what happens in the next a few minutes or so. See if this holds. See if we do get the push down. We are only risking 1% in fairness. See if we'll get the continuation. I still believe that this is going to be the area we're going to be driving down to just before NFP, and then we may shoot off up. Okay, so again, I was looking to be risking 2% in the final week because it is the NFP. I'm just going to risk the 1% a day, to be honest. Okay, so I'm going to pause the video and we'll be back in a moment. Hi guys, so as you can see, structure hasn't held on here. We've had year -1. Let's take a look. -1. End of the month. End of the results coming to the crescendo. So we've done a 1% risk. We've got a -1. Now let's delve deep into this, okay? So we have our magic wand, okay? Now looking at price, let's just understand what's happened on here. So what we've had, this is our sort of lower high. This is the lower low, which broke structure from this point, okay? So we were looking at entry from the order block of this, which was the last down before the up. This at the moment, structure-wise, there's liquidity because every candle holds its own liquidity, okay? So just to give you an understanding, that there will hold liquidity, okay? So from that there to that candle there, there's just under a pip. There's just under a pip of, or it's like half a pip of that of movement. Again, it's coming back down to the downside. But more importantly, just to ignore that part, okay, it's tell that structure part there. It's broke the structure of here. It's took out liquidity from the previous swing on the lower high, okay? So again, all the stops or the limits sort of thing will be taken out. From there, I just want to take your attention into this initial sort of drive. And as we look further into price action, okay? So again, we speak the other day about things like imbalance and things like that. We've got a big drive down here. So from that wick there, as price is moving up and down here, all that is, it's selling power, okay, as you can see, until bang, the buys on this candle came back up to mitigate into that. So all of that had to be mitigated, okay? It got mitigated here, okay? So you're on the understanding on how the sort of imbalance works. So again, I'm just going to put on here that is imbalance at the moment, and it was taken out. It was taken out right there, okay? Now, that is just to give you an explanation. Now, if we look and drive on the initial price at the moment on the structure of this swing point, okay? Let's have a look to see if there's any imbalance, and I'll explain something in a moment. So there's no real imbalance on here, okay, other than this order block that resides on the bottom, which would have been our TP area anyway, okay? So as you go up, you've had a drive up, but then you've had a wick to come down, filled. Drive up, wicks come down, it's filled, okay? You've had the drive up, but then the sellers have come back in, filled, okay? You've had the drive up, then we've had an indecisive candle on the entry area. You've had the drive up, but where the buyers were come across, contracts are being filled, okay? Had the drive up, again, you've had the drive up, and there's no imbalance on here, and it's the same on these here. Again, there's a tiny amount of imbalance right there. So for me, the overall thing on this, okay, let's just get this down here. The overall thought process on this is price efficiency has been met on this swing point. So this could mean one or two things. We've just had the mitigation of that imbalance there. Again, let's just drill in. You see the mitigations come into play and met that. But not only that, when you look into this here, there's liquidity resided along there. So it's taking liquidity out there. What we could possibly look at is when we get the next candle forming on this, okay, when the next candle comes into play, let's say it's got six or 7 seconds. When this is forming, okay, if this candle was to be within this area, there is other techniques you can use where you can say, right, well, if that's the case, we've got that there. We could use that as its liquidity sort of area. Then you could look left, okay, see where liquidity resides, okay. It's residing on the higher side there. You could potentially target this high here, which is that there. I mean, this is not going to be a trade. I'm just using this as an example, okay? So again, because the liquidity has grabbed that there and it's took the imbalance, we might see an initial drive and a push up to the higher side, to be fair. Let's just see this out of interest, see if it does hold that sort of structure. Again, this is not a trade. This would not be a trade. It's just basing it upon, let's get this here, get rid of that. Not going to get that in, am I? Sorry. So, we'll see if that structure holds or whether it's going to come back and take out the downside of this particular candle here, okay? Because now liquidity is residing here. I mean, this is going a bit more in depth, if that makes sense. So liquidity is residing there as a candle. Each candle holds its own structure from a supply and demand area, okay? But again, this is another technique. It's a bit more advanced. This isn't a trade as such. We're going to see if this plays out. This is going to be more of a technical analysis sort of thing. Again, if this was to come down and break out of that structure, we could then use an order block on the higher side, because now we're coming down to take out liquidity on the bottom side, if that was to make sense. But I'm not going to get into any trades for that. I'm just trying to give you a deeper understanding on how candles and structure is not just on the longer term movement. Candles and structure and formations can be just from within the candle itself, from an initial drive. And the thing I'm getting at with this, again, just to try and give you a light bulb moment, is we've had price efficiency on the way up here, okay? Nothing really much as in balance. However, we left a little footprint here, okay? And what's happened is we had a little bit of consolidation. We left a little bit of imbalance on here, okay, with liquidity building here. And then from there, we had to push down, taking out the imbalance, but also taking out the liquidity. So once you get the next candle forming from here, and it's above and it's between this candle here, and it's between that candle right there. Just get this highlighted a bit more. When it's between that candle right there and the drive has continued, okay, and the drive is still continued up, this is holding validity on the liquidity from just that candle formation, and this is telling me that this may drive further up to the upturn, okay, and that's a 1 to 1.76. Again, I'm not holding this as a trade. It's just something extra that I've learned over time, and it's a little bit more of an advanced technique. We'll see if this plays out. The purpose of this video and these sessions have always been about sort of order blocks. In essence, this is a little bit like an order block, but there is so much more you can put in your arsenal of trading once you learn candle formations, candle structure, liquidity areas, imbalance, what happens when imbalance is taken, if there's been price efficiency within an impulse drive, if that price efficiency hasn't left any sort of footprints for you to come back to return to, then it could confirm that this is going to be a continuation in movement. Okay, from there, guys, it's looking pretty strong as we go into delving deeper. Okay, we are looking, we've now got some imbalance from here to here at the moment. That needs to be filled. See if that comes in to sort of fill that. Again, we may get the pull in to do price. What we would need to ideally see is this to be filled, so it's continuing with price efficiency, and then a little bit more of a drive up, then hitting the liquidity from a bigger aspect from this area up here, if that makes sense. So you see how that's wicked in beautifully? That's wicked in. So that's confirming this impulse drive and giving that more confirming like the price efficiency within this impulse drive. We may get that final little push. Just make my head a little bit smaller. We may get a final little push to the upside. So now the liquidity that's residing is just that tiny little bit there. The imbalance, sorry. I mean, again, the reason why I'm targeting this up here is for that high side. Again, it might not have to, it may not have to go all the way to the top of here. So that is the high, okay? That's the target area. And I hope this is giving you a little bit of a light bulb moment, a little bit more in-depth look on the sort of stuff that I've learned over the years of trading. Let's just see if that gets hit. Again, you can see that would have been imbalanced, but we've come in to meet. So price efficiency is still in the floor and still respecting these areas. There is just that tiny amount of imbalance here, but we're going to get that push up 1.76. And again, if I'd been trading on my normal day-to-day by myself, this is something I may have taken as a trade, in fairness, once obviously we had that counter trend go the other way. But we're going to see if this holds, if it holds its structure, and it's all based down to the solitary one candle, the wick coming down, taking that imbalance, and then obviously your candle, the next candle formed, has been a continuation, and this is holding structure in itself at the moment. Again, price efficiency, it's coming in, it's mitigating areas. We just need that final little drive up. Is it going to take out the previous history to the left, I should say? How far is that from doing it? How far? Let's take a look. We're not even a pip away. I would have possibly more or less closed that out from there, to be honest. Again, this has not been a trade, it's just giving you a more insightful, in-depth outlook of how I sort of trade other candle structures and things like that. See if that's going to meet. We might even still come down and check out the imbalance on A before we get the initial drive and push up, to be fair. Again, let's just do that. It's 50%. It's hovering around the 50% of my TP, to be fair. Again, buyer zones. See how it's respecting the zones as well. I do want to pause the video. I want to keep this live just so you can see what happens with it within the drive of this push. There we go. Look at that, guys. Don't make this stuff up. Like I say, I don't make this stuff up. This sort of stuff comes with practice, comes with time. You just need to be on the charts. I mean, I was able to identify this and do this in front of your very eyes. Because obviously, as I've worked with smart money, and the scalping, I've been able to identify key areas and things like that. It was just nice to see that play out in front of your eyes, to be fair. So that would have been a 1.76 gain. If I taken that as a trade and put this as part of the session, then this would have put us in profit for the day by about a 0.2 or something daft like that. But again, I'm basing the foundations of this month's trading solely on the order block from the breakout. Okay, so again, if that there is sort of blowing your mind, just let us know in the comments. We're going to have a little look as well to see if we can find anything else. We are coming up to what I like to call the half-time area. So I normally like to get a cup of tea shortly. So we'll possibly be looking into doing that. Just going to go into the path. I'm going to pause the video for a second, guys, and I will be back very, very shortly. In fact, we could possibly use that as an order block there because we broke the structure here. This was formed here. Order block. Just looking at a couple of things before we go along. Could have that. Liquidity there. Right, so I'm going to base this upon structure of that, okay, this here, but also liquidity on that, okay. You see how I've got the liquidity residing here, and I'm going to have that on just on a 1 to 2. I had to push out here. We'll have this on a 1 to 3. And we'll risk 1% again, okay? We'll risk 1% upon that trade, okay? So what I'm going to do, I'm just going to stop the share a moment and have a little bit of a chat. So on what I've just shown you there, okay, every candle that forms, right, the body, the wicks matter in trading, So as you can see from there, we come back and the drive that come up our drawdown area, it came up into the drawdown area, stopped us out, okay? So the first thing I done instantly was look at any footprint that was left between the swing low, the swing high on that footprint, on that swing, okay? The reason I done that, I was looking for imbalanced areas, right? As you've seen, I did this in front of your eyes, look for imbalanced areas. There was price efficiency throughout that swing. There was nothing that was going to tell me that price was going to come back down to mitigate into those areas, right? Now, from there, we had a little bit of a consolidated zone. We had 1 or 2 candles, and then on one of the candles, there was a spike in a wick, okay? So on a candle, bang, got a candle, wick. You've got a support and you've got a resistance area. You've got a block. Same preference, okay? Always work. Every single individual candle, wicks to wicks, hold their own significance. And on this, that candle there took out, bang, some liquidity just to the left, and it was a strong wick. But then there was a continuation. There was no price inefficiency on the swing, so that spiked down to take out the lower liquidity just to the left of it, and nothing else on a footprint to the left told me there was going to be a continuation in price movement. The next candle formed, held its structure from that candle with the wick, if that makes sense. So there was nothing that broke out to the bottom, which would then take that liquidity, and it continued on its move up. So I knew I could have an entry on the body of that candle. The stop loss was at the new liquidity low from that grab on the left. I just looked to the left on the history and targeted a previous swing high area from around about a week or so ago, and I seen that was going to be a determining sort of TP area, and it played out beautifully. Okay, again, I urge everybody to, if you have a light bulb moment or you want to see this play over and over again, pause the video, go back, watch the play-by-play. There's a certain name we give this sort of trade idea and aspect. You can actually trade this to be massively profitable. Okay, but that is something else I need to go into on another sort of video on another day within the group here. Those sort of drives and liquidity grabs from a candle formation can normally give you like 1 to 10s, 20s, 30s, maybe more. Okay, but you've got to really train your eye on understanding when them are going to happen. And it's all to do with that swing. You get taken out. There's no footprint on the price efficiency on the drive. So there's nothing for it to come back to mitigate into. And the only way it's going to go is further up, because it's taken that liquidity just to the left of it. So I'm just going to go back and share the screen, see where we are. And then what I'm going to do, guys, is make myself my half-time cup of tea. Again, we're starting to get the move. So I'm going to make this the area. That's the wick. Top side. That is our new. That's our new order block. And what I'm going to do, I'm going to use the. I'm going to use that, in fairness. So we're going to drive that a bit further up. So 10174. Right, so I'm going to expect that sort of movement, drive down and a push up. We'll see if we'll get that. What I'll do on this one, guys, I'll risk the 2%. We're in good profit. It's the end of the week. We're going to risk 2%. Okay. I don't mind if I end up with 3% down. We've got nearly a 40% month of growth, to be fair. So I'm going to risk a 2% on that. See where we go with that. I'm going to pause the video. I'm going to come back in a moment. I'm going to go make myself a half-time cup of tea. So that there just previous was a fantastic analysis, rundown, live, done in front of your face, and I hope you enjoyed it. So I'll be back in a moment, guys. Wow, come back. Half-time cup of tea. And we've just seen a missed entry, to be fair. Just see a missed entry. So looking at this, guys. See, we've missed that entry there for sure. And obviously, there's been a break of structure there, clearly, as you can see. Side. So 1 to 3. So we'll keep that as the trade at the moment. Still 2% risk, and we'll see where that plays from. And then we are more or less 20 minutes away, to be fair. 20 minutes away from the end of our 4-week trading period. I hope you've all had fun with what I'm doing with this. Again, on my YouTube channel, if you haven't seen them all, I'm going to put them into playlists for week-to-week combination. And again, if you go back and watch them, you're going to get so much out of them, okay? Because as the weeks have gone on, I've slowly gone into more detail on different aspects of my trading, my thoughts, my outlook, and how I can sort of keep with the risk parameters, keep with my trading plan. And you've seen today, even though it's not part of the plan, something I would have done to get myself back into a trade. So again, just to talk about this a little bit more while that one's playing out, there's the fire wand, just to give you another brief description. We had a trade, it crashed through our area, okay? Now, I deep dived into this while this was still moving, and I told you that there was no footprint between these candles. Each candle holds its own story, and there was no imbalance apart from on this lower side, which was this order block here, okay? So this was a target area, and as it came up, we entered into a slight consolidation zone as it's broke structure. Now, that held liquidity in itself, okay? There was a big spike on price coming down. It took out 1, 2, 3, 4 candles worth of liquidity, okay? 4 candles worth of liquidity. The next candle held its structure between the body of this here and the downside. So I knew there was going to be a continuation of price. So I entered this candle as that was what took liquidity. That was my order block. It's an advanced order block trading system that I've come to sort of use. And I knew there was going to be a continuation in price. The reason for this targeted area, okay, was simply because we were taking out liquidity on there. And this is your light bulb moment again, guys. Because you were taking out liquidity on there, the next determining higher side was this here and this one here, because this impulse drive was what was holding structure from an impulse move. This here was going to be always the target area. Now, as that was the target area, you can see it held structure pretty well. It broke and then it come back in and then it rose again. Again, guys, I don't make this stuff up. You don't need indicators to trade. You work upon price action. Once you learn the structure and things like that, trading even on the 1 minute, and you've seen me do it there when we were at this stage of trading. When we were at this stage of trading, I was not stressed. I was not rushing. I was giving you a play-by-play bias on what was happening within the candle formation. And I sort of said, this is where you would have ended. And this is where the TP. We watched it play out. We were still watching for price inefficiency on the build-up on here to see if there may have been a reversal come down. But as price continued, there was nothing leaving a footprint behind for a reason for the price to then come back down to come into sort of like a fake out from this lower high, if that makes sense. So we knew price was just going to continue to drive. And as we've done that, we've got the pullback here. We've now currently got our order block here. But again, we're starting to get a breakout of this area here. It's not causing too much of concern for me at the moment. I would still say this is going to sort of be the thing that would hold the structure. To be fair, we'll wait for a price to come down, giving us a 1 to 3.37, 2% risk. We have got roughly 15 minutes. We'll see if it enters. If it enters, it's live. Again, I am documenting these to the 10:30. We'll see what happens, guys. So I'm going to pause the video. We'll come back. But today's session for me, personally for me, even though at the moment we're in a -1, there's been some massive golden nugget there. dropped right in the middle of the session. So I hope you're going to play this video back and re-watch it. It's something that I can go a bit more depth into detail inside Discord channel, to be fair, with regards to how liquidity areas can be taken out. Again, if we go on here, you can see the formation of candles. Okay, now if I was to go a little bit deeper, look at this. Okay, you've got you've got a formation there, so that would have been liquidity, okay, in itself, structure-wise, for one candle. Okay, that's liquidity. We've come up, and as we're coming down, okay, look at this. If we build this, out, look, there was a liquidity grab here, and then a continuation up. So what you could have done is, yes, now we can set a trade from there with the liquidity grab here, okay? What's on the sort of higher side to the left? Let's take a look to the left, okay? There, if you look to the left, there is the high, okay? So that's given a 1 to 6.2. Again, whereas price at the moment, price is residing, and it's gone all the way to the top end, which is this here. So if we chose that as the high, okay, and if we brought that price up to here as an option, okay, there's a risk to reward on that alone of, it would have been 1 to 3.52. Now, the documentation and the journey on this has not been based upon that sort of structure, but it's giving you an indication on how you can look at price, how you can look at these formations of candles, and more certainly how on, this happens on all time frames as well, don't get me wrong, how liquidity can come down and take a grab, okay? Now, if you look into this as well, bang, okay, that there's liquidity on the candle on the high side. There was a driving force of buying power, okay? A driving force of buying power, and there was nothing mitigated until we come into there. It took the halfway of the mitigation, okay? So that there mitigated here. So there was imbalance left on the downside here. We pull this out. Look at that. I don't make this up, guys. 50%, 50%, 50%, 50%. It's fantastic, and it's beautiful how you see. It's just like a work of art, how it plays out and things like that. So again, I don't make this stuff up. I'm doing it live in front of you. It's stuff that I've learned over time. And more so now, I'm condensing everything on my goalposts. It's opened my mind, it's opened my eyes, and I see things a lot more clearer because I'm squashing everything into my goalposts. You are understanding the price action, you're understanding the movement, you're understanding the fluidity of the way the candles are forming, shaping, and what footprints they leave behind. And the more you drill into this and go, that's my time, over time, you are going to understand structure. I can guarantee this, you're going to understand structure and the way a price moves by tenfold. And that is a guarantee. That is a guarantee. And even more better, if you were to come in, and sort of hit the join and the support this channel, you'll get access to all of this. There's so much more going on in that right now. There's so much value I'm giving with this. There's so much more I can give you, so much more I can teach you. And it's never about an indicator that is telling you there's a sell, there's a buy. I mean, there's indicators out there with exclusives and things like that. It's all they do is they work on pivotal reversals. Okay, you don't need to know that. I've just shown you there without an indicator what I was expecting from there. And again, guys, it's great stuff. I just enjoy doing it, to be fair. From there, it looks as if we're not going to get the price drive down. Let's take a look. We may be able to move this up a bit more, to be fair, because if we do class that, the right thing, John, we can class that as a break of structure, to be fair. So let's just take a look. So you can get something out at the last drive. There's a 1 to 2. We're waiting for price to come in, see if we can get a 2% risk, see if we can get a 4%, bring it to a 3% gain. So we'll just wait for this, guys. I'm going to pause the video. We'll come back on the half-past hour and we'll do a conclusion, a chat, and see where we're going to be going to the next steps, okay? I hope you're having fun. Please give it the thumbs up. Please give it the like and let me know what you're thinking of this series so far. Okay, thank you very much. There we have, guys, 2% risk. We've entered just before the very end at 2 to 2. This could bring us back if it goes into profit. We are on a couple of minutes before. We're going to manage this trade out, to be fair. We'll see where it goes. Let's see if it gives us that 2%, giving us a 4% finish. Let's see. We'll wait for the push and the drive. I mean, if it hits us out, it's a 3% loss for the day, but hey, we'll still be about 35% profit for the month. It's all happening at the last minute on the final day. On the final day. And if needs be, if this goes into a sort of consolidated phase within the sort of structure here, where you've got like a higher high, your higher high, you know, see now this structure wise is going into the higher low. You've got your break of structure here again, higher high, and then you've got your higher low. I just like to mark these out just so you can see them play out. Again, we're going to stay on this because I want to see if this plays out. If it does, we end the trade at a 1%. It would happen on the final day. We go into overtime. In fact, let's just see where we are. 1.24. Where's it at the moment? It's at 1 point. Right, I'll tell you what I'll do. I'll close it out there. Okay, I'll close it out there. That's a 1-to-1, 2% risk. It's 2% gain. Okay, there'll be a 2% gain because I have got other things to do. We've got a 2% gain. From there, guys, because I do like to close this out on the hour on my time parameters. So that was a 2% risk, 2% gain. We've made 1% today, so you couldn't make it up. We're going to have a final chart. In fact, tell you what we'll do. We'll update the chart first. Excuse me. So we've had today a -1. Okay, and then we had a 2% gain. Okay, and then if we do that, we got our growth as 1%. That makes it easy. 39.07. 39.07%. 39.07 divided 9.07% divided by 20 days for that month, 1.95. carry that, yeah, 1.95 is slower, 1.95% a day. Right, so conclusion time. Stop share, make my handsome head a little bit bigger. So overall, conclusion wise, I purposely done this for a couple of reasons. Okay, one, it's a new concept that I put towards the group here. I've been doing this sort of stuff for a little while, and I'm always open and honest with everything in the approach that I do. Going on the analysis that I've done this month with that, I mean, you obviously know I'm in on a FTMO challenge, okay? The FTMO challenges are the other challenges that I've done. I've never incorporated that style or that strategy into those challenges. It's something that I'm heavily going to do from here on in. I've always worked upon the higher time frame stuff on the challenges, but I think in the next week or two, what I'm going to do, I'm going to start a challenge off, and I'm going to do it based upon that strategy there. It just makes sense. 4 weeks worth of trading, and it's been over 40%. Again, it can be an emotional approach. It's a skill set in its own right. But this is why we condense stuff into a goalpost area, a general bias with your crossbar and goal line with your supply and demand areas. It just takes your focus within that. Today's session has been phenomenal, simply because I like to deep dive into structure and analysis. I found that I'm doing that even more now. I've been working on the lower time frame, and for me personally, doing this has brought something extra in my trading ability, and it's sort of highlighted that for me, because I've always worked upon structure on higher time frames. When you're doing that, you're not going like as in depth as what I've been doing this week on the analysis and looking at footprints that's left behind, imbalance and things like that. I don't sort of worry too much about that on the high time frames, because it holds more validity in those zones, if that makes sense to you. But it's just showing you in my personal journey over the years that the stuff I've learned and took in like a sponge. I like to know the ins and outs of everything, but it wasn't until documenting this series of 4 months worth of scalping that I've seen so much more in my own trading ability. And in all honesty, it's put a huge smile on my face. It's made me feel more confident in what I do, in my own ability. So driving forward, there's something that I want to look at on the results as I sort of analyze the results I'm getting from that the month's worth, because there is what we call stuff like asymmetrical compounding, where it's all to do with the risk to reward. When you get a couple of trades, you sort of add your risk to reward in addition, and then you risk that amount on the next trade. Now, giving you a snapshot of what that contains is, if I've taken around about 39% profit from an initial balance of growth, okay, that 39%, if we use the compounding effect, this asymmetrical thing, which I will be looking and possibly doing another add-on video to this, that 39% could well possibly be in excess of 100% or more profit inside of a month, doubling up what your initial balance would have been. Now that is scary, and at the same time, it's fantastic. It's fantastic, you know. So again, let's say on preference, just as a number and statistic, okay, that you were on 100,000 prop firm funded account. just for argument's sake, we'll make it an even rounded number. Let's say I've done a 50%, it's 50K for the month. Okay. Massive. That's massive. It's 40%. You look what, 40K, 39K it would have been, because obviously the 1% of whatever. So it'd be around about 30 odd K for a month's worth if you were funded based upon the structure, implementation, and taking action and trading that style. That would have been about 40K in balance. Now, the next bit I'm going to do, which is going to be this asymmetrical compound, when I go back and look and I do all the analysis, crunch the numbers, and I sort of do the formula on that, I bet that putting that into that compound effect, that 39K, which it would have been around about, that 39K of profit, if I was on that 100K funded, which is what I'm aiming towards getting, I bet that 39K would be in excess of nearly 100K profit. Now, that's a thought, and that is scary to think, guys. This just shows you the power on what this stuff can do. But more importantly, after all that's said and done, next week, I don't think I'll be doing any sort of live recordings or live sessions. I'm going to now take a little bit of a step back and concentrate on doing a challenge, because while I've been doing this, I've been trading a challenge and I've been trading a live account. In essence, I do three accounts. I've got three accounts I always trade, and each one holds a different sort of strategy. So I don't sort of take the same trades in every one. So obviously, whatever I trade in each one, they'll be affected differently to each of those strategies. Okay. Now, one of those balances, or one of those, is my challenge, and that has taken effect this week, because I've been doing this as well as trying to take trades at the same time. Although the trades that I do based on this here is not the trades that I take on that. So I'm trying to analyze two charts at the same time. And although I was in really, really good profit with that, I've sort of took a dip in that. So it's took an effect on other things, but I'm not worried about that, simply because I'm here and I'll always be here for long term. I see the power in everything that I do with this. I love giving the value into the Discord that we have on this, and there's not just me. I've got so many good friends. I've made so many good friends. I've got an amazing group of moderators in there that's driving my passion and driving my vision, that I can see that they see this as well, and it's helping so many people in and around what we do. So in conclusion, and at the end of all this, if you're watching this on YouTube and you're not involved with what we have here, okay, if you see the value of what I do, please just go to whatever's below the video here. You'll see the button that says join. For the price of a cup of tea, okay, you've got to keep me in your cups of tea. Cups of tea, you know, you can either come in at $2.99 to support the channel, or $8.99 per month. Now, that is nothing. That is nothing compared to what most other places charge you. And believe me, you're going to get so much value out of this. And it's not just from me. This isn't just me. This is a community of other traders that are aiming for that same goal. Everybody has a different part of their journey to share, and experience and knowledge, and you'll get so much out of that. So again, just always engage with what I put on the videos. It helps with the algorithm. And if you are getting value, okay, please support the channel. Keep me my cups of tea. Okay, it's only a couple of quid a month, and then we'll get you inside of this. Okay, see you later, guys.